control by becoming rich.
Take all your money, buy Bitcoin.
I say when we sell.
Wake up every morning and say GM.
GM. GM. Today is Monday, the 30th of September. And we are getting into the last day of the month. So, here we go. All right. Starting off with a bit of a dip this week. In a very simple price action sense. Bitcoin flushing overnight. Let's jump in and look at what the cause of this was. We've seen a pretty significant build-up of open interest all the way along here. We're back to sort of the July levels on BTC, while price is not. So there's definitely some positioning here coming in. From the open interest lows, it's up 35%. Price is not up that much, of course. You can see the spot premium, which had been pretty persistent, is still there, but it's kind of trending towards more neutral again. Funding's rising, but again, funding rate itself is not a major factor really. As you see when you zoom out, it's just not that historically high at all. So nothing too much to read into there. And I think the simplest is just price itself. So for BTC, below this level, below 65, in a really simple sense, this is a false breakout. So that's nothing to be really surprised about or overly concerned about. If you're expecting Bitcoin to continue on to 70, it needs to be above 65. So below 65, it's not going to 70. Keep it really simple, right? If it's not above 65, it can't go to 70. If you want to see that move, it has to get above 65. Since we're below 65, and there was a lot of positions built, like relatively, there's quite a bit was built above it, over here. Not just on BTC, but on altcoins as well. Especially on altcoins. In fact, if I go and look at altcoin open interest changes while BTC was above that level, you'll probably see this more. Global OI, and we'll take off BTC, and we'll just look at all the alts and everything since we got above that 65k level, which is about here. So from BTC crossing that 65k level and that initial first dip, open interest is up about 5%, about 1.1 billion. Not much really in the way of altcoins getting wiped yet. In fact, open interest has stayed pretty much exactly where it is. This seems to be just a Bitcoin. It's not just a Bitcoin dip. Altcoins are also dipping, but the open interest is not coming down, which means the market seems to be staying long alts. I mentioned this for Pepe yesterday, how you had a 1 hour market structure break. You have 3 attempts to push, sort of this head and shoulders / over under, and comes down, bounces, first bounce fails, comes down again. You want to watch these coins coming into their moving averages. So this is only the 1 hour, and the 50 EMA has not really held. I would say Pepe will probably head towards the 100, maybe the 200, but what you should be looking at is in a strong trend. It's going to come back and it's going to find itself support around one of those moving averages, most likely, before the next push. And it doesn't seem like it's going to be the 50. So with Bitcoin where it's at, below 65, that does open up the possibility for a deeper flush. It's the end of the month. Going into October, we might see some selling to begin the month. So if that happens, you can see deeper pullbacks across these alts. You know, they've all had significant rallies. They've moved up, topping type of candles, probably some kind of sideways consolidation here, or like a 3 or 4 day pullback that gets a strong bid. But I think that the simple way of looking at it for me is trickier for swing trading right now because BTC had a significant rally. We're going into the monthly close. There's going to be some volatility around the end of the month and the start of next month. This monthly close is fine. It's pretty good, right, overall. But it would be much better if it closed above 64.6. Last month's open. Because you can see here on this kind of sideways correction, if it's able to close above the July open, which is at that 64.6, that would be a monthly shift. It's not really, it's not a significant downtrend, it's just more of a sideways consolidation. And none of this on high time frame is really anything majorly to worry about. Certainly not at the moment. We got a good weekly close. We got our weekly shift, which closed above the previous. So this down leg was invalidated from the high. It led to a new low in a close basis. We moved up, closed above it. So that immediate bearish sign has been invalidated. The bands and the weekly have gone back to green. They flip back to bullish. And that will trigger a lot of longs and a lot of positioning to get in. So when you're looking at it from this perspective here, everything including the daily EMAs is about to go bullish. Even if Bitcoin pulls back here, these daily EMAs will still cross unless there's a big collapse. You're going to see the 50 get back above the 100. So that means Bitcoin's in a 50, 100, 200 trend on the daily. The 12-hour is crossing. It's close. It hasn't quite yet. The 100 needs to cross the 200, but within the next couple of days, that'll cross too. The 6-hour is bullish, 50, 100, 200. The 4-hour is bullish. The 1-hour is bullish, but potentially going to cross. The 15-minute is bearish. The 5-minute is bearish. The 3-minute, the 1-minute, and so on. So the high time frames are in the process of flipping from neutral / bearish to bullish. Obviously go out to the weekly, still fully bullish. So your highest time frame, let's just take the weekly as highest time frame. Your highest time frame has done what? Large trend leg, resets back, holds the 50. Great. Your intermediate trends, 3-day bullish, daily about to go bullish again. So higher time frame positions being built is the correct way to look at it, and getting long on that perspective is the right play. But if you're talking about like a trade that you're taking on a 3-day chart or a 1-day chart, it doesn't negate the fact that you can have some sideways chop in between then. And so if you're looking for immediate continuation, you're looking at your lower time frames. 6 looks fine, 4 looks fine, 1 is getting touch and go, and definitely 15-minute is straight up bearish. So it's not a place to be expecting Bitcoin to quickly reclaim 65 and break out to new highs. It would be, could we see a rally up to there? Yes. You know, we had a pretty one directional breakdown here this morning off the daily open and the weekly open straight down. So I don't think this will just go down straight away forever. We have a support level below. Really, you want it to hold no lower than here and reclaim the 1-hour as quickly as possible if you're going to expect this 1-hour trend to hold. If that does happen, if price holds here and climbs and stays with a 1-hour trend intact, then that'll also flip the 15-minute back. That'll flip the 5-minute back. So your lower time frame trends will be back in bullish formation. The 4-hour is still fully bullish anyway. The 6, 12, etc. And that will give you your best chance of this week producing new highs. So it's all about watching the 1-hour really. I would be just watching the 1-hour chart to see if it's able to defend this. If this 50 crosses the 100 and the 1-hour trend starts to weaken, it would be the first time that that's happened since, I guess, over here we had price flirting with losing the 1-hour. And you know, you're really looking for something very similar to this, right? Where it goes below, which it is, it reclaims and it comes back and it holds, and the 1-hour gets back into bullish formation. That leads to new highs. If not, so obviously what that would look like, something like this, where it comes back above, consolidates and breaks out. If not, you're going to see something like this where it comes up into it, it's not able to flip it. That's when you officially turn the 1-hour trend red, and you probably have another couple legs down. So looking at it like this, not white, red. And these would be the 2 ways. So high time frame. Daily looks good. 12-hour about to cross, good, bullish as well. 6 is fine, 4 is fine. Weekly obviously is fine. So the higher time frames are looking bullish. Lower time frames are, 1 minute, 3, 5, 15 are all bearish. 1 hour is the area that's being battled for. So 1 hour is what you should watch. And you're really watching how does the 1 hour perform when it tries to reclaim this trend. It's going to go one of 2 ways. I don't know if it's going to bounce exactly from here. It could continue and flush lower. Don't forget there is a leverage buildup. You might just get a sharper, deeper dip. If so, I'll show you some altcoins on Trade of the Day and how to look at that. But yeah, I think red path means that we spend the start of October maybe chopping a little bit lower, and that would flip the 1 hour to bearish. Then you'd be watching the 4 hour, which should be completely fine. We might get a deeper pullback just into the 4 hour 100 or the 4 hour 200. That won't affect the 6 hour. It's still going to remain broadly bullish. It might, if it's deeper and faster, it might affect the 12 and the daily, but it shouldn't really unless we have a break below 61, which would be like the worst possible short-term outcome. So keep an eye on that. There should be enough bullish incentive in the market. There should be enough people waiting to buy the dip, either from a bullish new trend, new highs perspective, or at least just too many longs built up over the weekend, got flushed out, and we just get a reactionary bounce. So the area I'll be watching is that, those 1 hour bands around that 65k level. That's the area that needs to be reclaimed. I think bulls will try to reclaim it. If they do, then we are set for new highs this week. If they don't, we are set for probably a choppy consolidation week. So overnight, has anything happened in S&P? Not really. Is this just a Bitcoin isolated move? Gold, not much really happening. The dollar, not much. Obviously, dollar continues its sort of slight weakness, and so it seems to be a pretty much just a crypto move here. Total 3, yeah. Bitcoin's down more than alts. Total 3 is holding up more. Bitcoin dominance is probably down as well. Yeah. So Bitcoin dominance taking its first attempt to break lower. And so is this going to be correct? Meaning, are we actually going to see an alt season? Which I don't think so, and I really don't want to see. I don't really think you want to see an alt sustained period of alt performance when Bitcoin's only in the middle of its range. Definitely check out yesterday's stream. Me and Professor Ayush talked about this. Professor Ayush asked me, what is the sentiment like? So check the stream. Stocks and crypto crossover. And there's also some top G timestamps on it, which you might see here. Reflections on Professor Ayush opinion on Michael Stance Asian market. It might be that one. China, money flowing, sentiment. Here we go. 2630. That's exactly what it was. What is the sentiment in crypto right now outside of the real world? And my answer was that it's like gone fully bullish again. You know, I'm sure any of you have been on Twitter over the weekend, you've seen this. And he was surprised. He's like, really? With Bitcoin just in its range? I was like, yeah, exactly. So the market has gotten a little bit ahead of itself, as it tends to do, where with Bitcoin not even reclaiming like 70, sort of just moving within its broader range, which again is fine. This is all just an accumulation process for BTC. And on today's monthly preview, I'll go deep dive on that, where you can see it in much more detail. I'm going to do that at the start of Ask Michael. So I'll do a double stream today, where we'll do monthly preview and then we'll do some questions and answers about BTC and its super cycle potential. Not the fucking meme super cycle that like Suzu, the liquidated fucking retards, are doing. An actual commodity super cycle. These are a real thing. And so Bitcoin dominance dropping while Bitcoin is pulling back below 65. Not great. Just keep an eye out for that, because I think some of the positioning in altcoins may be a little bit overextended in the short term, and that's going to lead to some of these pullbacks. Bitcoin will be a buy the dip. I think that Bitcoin will be strongly supported once it finds some footing. There's nothing to stop it from going as low as, I mean, it can really go through any of this, right? There's nothing to stop Bitcoin. If it's taken these highs and it has failed at them, which it has, again, unless it reclaims 65, well, there's the swing low. And here's probably our strongest support, right? That's this kind of block is where the market moved up, had a chance to reject, pushed higher. So BTC could easily come down into all of this before going higher, or even just have a shorter, shallower dip into there. And of course, that would cause some carnage across the market. It would probably flip a lot of these swing trade signals and triggers. A lot of trend triggers have flipped long, which gets a lot of people long, and then the market pulls back. Very, very common. The reversal trade has happened. We're now waiting for the trend continuation. The way that would look is if you are trading at the lows, right? If you're playing the reversal, where price is actually moving lower, but your systems are telling you it's likely to reverse. I want to get in because sentiment's bad, positioning's bad, it's overly skewed to the short side, a lot of selling, and there should be some kind of bounce. Well, the reason for a reversal trader to exit is when trend traders get long. Because you've really the two different types. you have a trend trader who follows trends. You then have a reversal trader who plays in the transition, and then you have a trend trader who follows the trends. So if you look at it like this, on the way down, in this part here, when it comes down, up, and then breaks, this phase here is characterized by trend followers on the short side. So they're following the trend. The trend is down, I go short, I go short, I go short. In this area here, this is where reversal traders step in, right? A reversal trader will step in there and probably take it up to about here. Because you don't have the structure break yet, you don't have multiple BOSs, so you don't, and you're generally not above the key moving averages. So a reversal trader is going counter trend. That's the style. So it obviously has its own risks, but it's a specific style if you manage risk and you test systems around it. Really, really good way to trade if you're so inclined that way. The reversal trader is trying to catch near the lows, and ideally you're trying to catch as early as possible into the uptrend without actually buying into the way down. And you're adding to it and you're holding it throughout the first part of the phase where people are still bearish. Then as it starts to go higher, you'll stay in. But then at this point, once it becomes confirmed trend, and this is where you see things like, if you imagine a moving average along here that it reclaims, something like a 200 or a 50. So the bearish people are bearish below that red line because they should be. It's a bearish moving average. The reversal trader gets long below the bearish moving average, which seems counterintuitive, but that's the point. And then the reversal trader wants to exit once it gets above that and the market says, oh, boom, we're back, confirmed trend. A reversal trader, very important. If you're trying to catch the bottom or catch the top, that's literally what a reversal trader does. You're not trying to then ride it all the way to the end of the trend. You're trying to catch the reversal and exit when the market comes in and says, we want to go long. If you imagine the two types, you have reversal trader and there's more than two. You know, there's obviously mean reversion, but it's sort of separate, but we're just looking at trend followers versus reversal traders. And basically, the way it works is the reversal trader wants to be in before the trend follower. Then, when the trend follower gets in, the reversal trader wants to get out. And then the trend follower obviously is hoping for the trend to continue higher. And if it does, so the trend follower would get in there. And if it does go higher, the reversal trader's on the sidelines. And when it reverses again, when they start to see signs over here, the reversal trader wants to get back in. Ideally, when the trend follower is still in and the trend follower is wrong, and then being wrong and having to close allows the reversal trader to get their next trade. And then once it starts to go into a confirmed downtrend, the reversal trader's out. Understand? Cool. So, all of that is to say, we've had a lot over the past, especially this kind of 2-week period. We've had a lot of ongoing confirmations that yes, it's back and we've broke this level and we've broke this market structure and we've reclaimed this moving average and the bands are all bullish and the bands are in line, which is all true. Weekly trend is bullish. Daily trend is sort of transitioning, trying to get there. But everything from the kind of 6 hour, 4 hour, all that below is bullish. So there's plenty of trend followers now entering. They're probably becoming exit liquidity for the reversal traders, which is fine. Doesn't mean it's going to go to new lows. It just means that in the short term, below 65, exercise some caution. Yeah? Good, GM. See you on monthly preview. And on trade of the day right now, I'm going to break down some of the data. Stuff I talked about on the weekend workshop, such as open interest in deltas, and give you an idea of what's going on across the market. GM.